Okay, good afternoon, everyone. Welcome to this edition where we'll go through the compounding insights for the market and the mutual fund updates for the month of ending January. For those who don't know me, my name is Anand. I'm the CEO of Omnicompounding. So today, broadly, we will cover four major topics. One, we will go through the macroeconomic trends. Then we look at the markets. Then we will boil down to the updates in the mutual fund industry. And finally, we will see how the funds are performing at the overall consolidated level. So the macroeconomic front, things look quite good. I think the oil prices are remaining stable. Any price below $75 is good for a country like ours. The inflation has been extremely low, and that's what has been forcing the RBI also to ease the interest rates, while the 10-year yield remains stable at around 6.6%. Definitely, I think in terms of gold, there has been a significant appreciation both on a monthly time frame as well as on a year-and-year. It has been a mind-boggling 85% kind of a growth that we have seen. It's like once in a history kind of a thing. So overall, from a Indian economic perspective, things look stable, but the rise in the gold is essentially pointing towards the global uncertainty that exists in today's world. The GST collections are quite stable. On a year-on-year basis, there has been a slight drop of about 1%. That can also be attributed to the lowering of the GST rates, which happened recently, which has had a positive effect in terms of increasing the consumption. The USD INR finally seems to be getting stable after continuously going through a lot of devaluation. The DII's inflows has slowed. The FIIs continue to be net sellers. So in spite of that, I think because of the infusion from DIIs, even though it has slowed down, I think the markets have been so far able to hold the ground. So this is how the markets have performed. I think in the last month, Nifty fell 4% in Jan. On a one-year basis, I think the yearly return was very low, close to 9%, which is way below the long-term averages above about 12%. Mid-caps have taken some beating, negative 5% on a monthly basis, and the yearly average is 6.53, way below the long-term average. And the harshest of the beating, the small cap has taken close to a 7% drop in the last month. And the one-year return also is a negative 6%. So clearly, I think the momentum is lacking in the small cap space, while I think the large cap of the Nifty seems to be holding quite reasonably, even though it is below the long-term averages. Now, if we come to the sectors, I think the CPSE, metal, and defenses have been doing very good, while I think tourism and real estates were at the bottom of the sectoral returns over a 1 month kind of a period. Overall, kind of a balanced outlook with about 14 sectors doing better than the index and 15 of them doing below the index returns. On the mutual fund side, I think the growth continues to grow. I think it's now close to about 82 lakh crore based on the PricewaterhouseCoopers report from AMFI. This number will go all the way up to 2,700 odd crores by 2047. So which says that even though the growth so far has been phenomenal, almost averaging at somewhere close to about 18 to 19 CAGR, we expect that to continue over a long-term trend, and the AUM will grow almost like 40x. The quarterly average rose 19% sequentially, and the top five AMCs with sequential growth have been all the new players. I think the Capital Mind, Helios, and Zerodha. This is another report which was published by Bain and Grow, essentially also showing it that really we do see almost like 315 lakh crore by 2035. So all reports are essentially pointing out toward the economy expanding and the mutual fund industry itself growing in a very, very significant way in the 10-year, 20-year time period. So this is how the AUM growth have been so far. So I think overall from the last month to this month, there has been a 1% increase in the asset under management, coming close to about 81 lakh crore. On a year-to-year basis, that growth has been 20.5%, essentially meaning that we have doubled in the last 3 years, which kind of show the significant growth that the industry is seeing. In terms of the inflows for the month, I think the inflows were close to about 1,56,000 crores. The bulk of it came in the debt scheme. Almost half of them came in the debt scheme, close to 74,000 crores. And the rest went to equity and the others. I think in the others category is where I think the gold fund of funds are also there. So quite a significant inflow has also gone to have gone to gold. In terms of the equity sector, the breakup of how the 24,000 crores flowed in January. I think the category that saw most of the growth has been flexi caps at about 7,600. Again, showing the market volatility, people are taking safer bets. And the next one was the mid caps and the large and the mid cap. So people are really going towards safer haven. And I think this is the sixth quarter in a row that I think the flexi cap is seeing a record inflow. On the debt side, I think most of the corporates park the money over here. So we do see that changes as the quarterly cycles come. The overnight funds have seen quite a significant increase, up to 46,000 crores. And the other one has been the liquid category. The corporate bond has been a category that is continuously seeing a lot of outflows. I think a lot of this is also related to the cash flow management of the company, advanced tax and stuff like that. So we do see some level of seasonality in the inflows and outflows of in this particular category. On the hybrid side, I think the clear winner has been the multi-asset allocation. And I think it has also been seeing steady growth over the last 6 to 7 months. And I think the inflows have been quite stable. In the passive side, as I said, I think the index investing is definitely getting momentum. So I think close to, and essentially the inflow that came into passives are quite evenly distributed per se between the gold ETFs and the other ETFs or the passive investing. So we are also seeing that the passive investments are driving higher inflows actually. In terms of the SIP book, also we see more stability in that. And I think SIP contribution contributes now to 20% of the overall mutual fund assets. The category that saw the introduction in October has been the specialized investment fund. This is a fund that sits somewhere between the mutual fund and the PMS with a minimum ticket size of 10 CR, sorry, 10 lakhs. And it is seeing quite a lot of traction just in the last 3 to 4 months. I think as of end of Jan, it was 6,500. Since we are recording it in February, I think I understand that it's already touching 7,500. So this is one category where there is a huge inflow that is coming in. We have seen schemes getting introduced across the equities strategies and the hybrid strategies. No fund houses yet has released any strategy around the debt. And the clear winner seems to be the hybrid category. So these are some of the equity strategies that are there, close to about three of the equity strategies. And I think given the market conditions, I think all of them currently have negative returns. But again, they've just been launched, so it's too early to declare anything. But we will continue to watch it. On the hybrid side, we have 5 schemes that have got launched. And clearly, Edelweiss and SBI seems to be the leader, both in terms of performance and in terms of AUM capitalization. The top 5 fund houses in terms of AUM continue to be SBI, ICICI Prudential, Kotak, Nippon, and HDFC. And we have also seen a lot of new AMCs getting launched, like the Geo BlackRock, Abacus, and the Wealth Company in the past 6 months. So I think many new AMCs are joining in. And I also expect many more AMCs to start participating in the SIF products. And this is the overall category-wise quick snapshot in terms of how the performance has been over the 1 year, 3 year, and 5 year time horizons. Also, I think we've tried to capture the taxation aspect of both for short term and for a long term, and what is the holding period beyond which it would be considered as a long term, and typically for which kind of a financial goal the particular product be suitable. That also is what we are showing in this particular attribute. The highest returns seem to be from the gold fund of fund, as we saw earlier, and also the multi-asset funds, which have had allocation in gold, are doing exceptionally well. Rest of them are all in more or less in a single digit kind of a thing, except for the overseas NASDAQ fund, which has also given close to 23% on a last year kind of a basis. So we will continue to monitor them. Do take a look at our app. You can scan this code, download it. You can also write to us if you need any help in terms of reviewing your portfolio, or if you want to build one. Thanks a lot. Have a nice day.